Okay, the financial plan. Now, once again, I want to reiterate that I highly recommend that you get a good CPA to do your financials for you. Two reasons. Number one is they'll be a lot more accurate that way unless you are a CPA. And number two, you'll be able to just copy and paste and drop things right into your business plan without having to do much worrying or sweating over getting all this done, because this is one of the most daunting parts of the business plan. But the financial plan itself within the business plan is pretty simple. The first thing you want to do is write out your funding requirement. How much money do you need? We talked about this in the executive summary, and you're just going to take the information from this paragraph and drop it into the executive summary. But you're going to say you need X number of dollars, and you're going to bring so much to the table in the business, and the rest is going to come from, and just put whatever kind of funding is going to be. The terminal value, now this is just an accounting calculation, and here we mentioned that it's in Appendix D. It's an accounting calculation that describes how much the business is worth at the end of 5 years. And the Gordon model of valuation, you can use that if your CPA recommends something different. But you just want to put down, after 5 years of hard work, here's how much the business is going to be worth. Then you have a pro forma cash budget. Now, cash is very important. We do have in C the income statement, but cash is cash, and so you want to know how is cash going to flow in and out of the business, and what's your cash balance going to be in your bank account, and just to make sure that you're really covered. And that's what this is for, and that'll go into one of the appendices. The income statement, the good old profit and loss statement, what you want to do is have 5 years worth of income statements. The first 2 years you want to do monthly. Years 3, 4, and 5 you can do them by just annual with growth numbers, or you can do them by quarter with similar growth numbers. You don't have to go all the way out into the monthly on that. Just the first 2 years are monthly. And then what you want to do is in the same section is drop in your summary profit and loss. Now remember, in the executive summary we had a very short one. This one is just slightly bigger. You're going to list out some of the key expenses in here, and you're going to carry it all the way down. So gross sales, cost of goods, your gross profit. Your key expenses, total expenses. EBITDA is earnings before interest, taxes, depreciation, and amortization. So basically your interest, your taxes, and your loan payments are going to be in here. And then you have earnings before interest and tax. And this basically just tells the investors how much cash is this business going to generate. Again, this is something I recommend having an accountant do. I'm going to say that over and over again. But you can find good templates out there. Microsoft.com has some. There's some other websites that will help you build your pro forma profit and loss statements. Now there's a website called bizstats.com, and if you go to that website and type in the kind of business that you have, you can purchase a typical profit and loss statement for your industry, and then you can compare it. And this basically just gives some benchmarks to help you plan your own profit and loss, but also to show the investors, look, here's how companies typically perform, and here's how our company is going to perform. And you do want to outperform it, but you don't want it to be, so much that they think you must be missing something. So you want your numbers to come in close to this, but it's a good planning tool. Ratios. What you want to do here, this is again just some accounting stuff, but you want to be able to calculate some ratios. At the end of the first year. Say at the end of the first year, here's how the business is going to look. Here's how much debt we're going to have. Here's how much assets we're going to have. Here's what our sales are. Here's what our net income is going to be. You just want to have a number of ratios that tell them, okay, here's how the company is going to look after a year of operations. Because it's just like when you go out to get a loan for your house, they look at your debt to income ratio. These are some of the ratios they're going to look at for your business to see how healthy the business is going to be at the end of year one, for example. And these names, current ratio, quick ratio, debt to net worth ratio, if you Google those, you'll find a quick formula and be able to easily calculate that at the end of year one and throw the numbers in here. The break-even analysis, basically break-even is how much do you have to sell in order to cover your basic expenses. Because let's say that you sell apples, and you sell one apple for $1, and that apple costs you 50 cents. So you have a 50-cent profit built into that apple. how many apples do you need to sell in order to cover your base expenses? That's break even. So you know easily, if you can tell what your fixed costs are, if we go back up here and look at your profit and loss statement, say for example, year one, here's what our expenses look like. On average, probably about $550,000 in expenses. So you can divide that by 12 to get your monthly. So 550 divided by 12 is basically like 45,000, somewhere around that. Contribution margin is that percentage that I just talked about, kind of your gross profit, that 50 cents. So you can put 50%. So in order to cover your $45,000 in expenses, you're going to need to sell $90,000 worth of apples. That's your break-even point. So this is a very simple calculation. Again, if you type in break-even analysis, break-even numbers into Google, you'll get some really good explanations on how to get this done. But a nice little table is all you need right here. The loan proposal is the next section within the financial area of this. And basically, you're talking about what's the purpose of the funding. Are you looking to build out your facility? Are you looking to start a new business? Are you looking to expand into a second location? Just very quickly, easily discuss, why are you looking for money? What is the purpose of it? Again, how much are you looking for? You're looking for so much, including how much you're